First, let's start with the Chinese conundrum. They're finally starting to talk about it. I love that. Thank you. Last week I mentioned there's this real estate developer called Evergrande with $300 billion in liabilities that could be on the verge of going under. Now, unless you're a country, you should never have that kind of debt load. Sure, there are a handful of companies that are large enough to count as countries. Evergrande's not one of them.
When we see a move like this, what we assume is following what's coming out of China that's sort of spooking the markets. I think we can look at Bitcoin's behavior and all cryptocurrencies and assume that they're risk-on assets that are behaving like equities.
Let's turn now to Bitcoin. It and other major cryptocurrencies weren't immune from yesterday's sell-off, with Bitcoin dropping as much as 10%. Now, all of this, of course, also after SEC Chair Gary Gensler warned last week that crypto is a Wild West asset class rife with fraud. And Coinbase yesterday dropped its plans to offer a 4% yield product after a pretty public spat with the SEC.
This week, the price of Bitcoin keeps dropping. With that said, should investors be worried? Why is this happening? What does the forecast look like for Bitcoin and other cryptocurrencies? Welcome to Crypto Revolution. In today's video, we tackle one of China's largest developers, Evergrande, and its massive debt that is causing cryptocurrencies to plunge this week. Yes, cryptocurrency prices plunged on Monday morning during a widespread market sell-off triggered by a catastrophic debt default in China. Evergrande currently has some $300 billion in liabilities and only $15 billion in cash on hand. If Evergrande ultimately fails to pay its debts, this could represent the first wave of bankruptcies. What one has to remember is if the company is unable to pay its debts, then the company's lenders, including some of China's largest banks, will come under pressure. In turn, that could make it difficult for companies that need to borrow money from banks and bond markets to access funds. If this happens, this would indicate the makings of a financial crisis and could possibly cause wider instability and turmoil, economically speaking, internationally. In the midst of this happening in China, this pushed many of the world's largest digital currencies down to their lowest levels in more than a month. The value of the world's cryptocurrencies plunged to a low of less than $1.9 trillion by 8:45 a.m. EDT on Monday, nearly 11% less than 24 hours prior, and reflecting a loss of more than $250 billion, according to CoinMarketCap. Heading up market value losses, the price of Bitcoin dipped 9%. To less than $42,669, while Ether prices fell nearly 10% to a low of $2,940, marking each of their lowest levels since early August. Even recently skyrocketing tokens like Solana, Sol, and Cardano's ADA plunged about 10% at the height of the sell-off. According to Stephanie Willett, CEO of Front Financial, a crypto derivatives firm in Toronto, once the Chinese stock market closes, a lot of people may sell crypto to raise cash. She stated that they've observed correlations to cryptos during large sell-offs, and you tend to see it a couple of hours later. They take a leg down. Although some are quick to say that investors in crypto should be worried about the overarching effects of Evergrande's situation, some experts are sharing with conviction that what is happening to Evergrande is not parallel to the Lehman Brothers situation in 2008. In these two clips we share with all of you, we have Ray Dalio featured on Bloomberg's Market and Finance, sharing what he thinks about Evergrande's situation. Additionally, we also have Mark Yusko, who shares what he thinks about this predicament and how it will affect global economies.
What we do, it's happened over and over again, is the central bank makes a decision of moral hazard. You know, they never used to have moral hazard.
Do you believe they're there right now after this week that we've seen in the markets?
Oh, they knew that this was happening, and there's a preparation for this, and they know that there's more, and that's a good thing, not a bad thing, because in the past it used to be that they would guarantee it. The banks, 5 major banks would loan to state-owned enterprises and local governments with implied government guarantees, and it was bad. So the process is the same. Expect the exact same type of process as we would go through, which is to say that there will be stung. Investors will be stung. That's how it works. And that the system will be protected because it's denominated in their own currency.
Beautiful. I want to get this on the record, though, Ray Dalio, because every Wall Street firm is saying this morning this is not a Lehman moment. What we witnessed yesterday in the lesson in price. Explain why this is not a Lehman moment to Ray Dalio.
Well, because a Lehman moment produced pervasive structural damage through the system that wasn't rectified until the Treasury came across in terms of its borrowing, and then the Fed came across with quantitative easing. But this is not that kind of a shake-up type of thing. This is $300 billion is what they owe, and this is all manageable. The basic economics is for all countries in all time is that if your debt is in your own currency, you can deal with it.
You can work it out.
You could work it out. We've seen it happen over and over again. And it's a good thing that lenders get stung or that the borrowers get stung. Okay. That's how the system works.
But China has had incredible credit creation over the past couple decades, really just exceeding anything we've ever seen before. Now, that is normal for ascendant superpowers, right? We saw it in Korea, we saw it in Japan, we've actually seen it in the US. And someone was quipping, maybe even to another post that you made earlier this week, that maybe this is China's 2008 moment.
Yep.
No, 2008 was China's 2008 moment. They bailed out the world. They're the ones that put $4 trillion into the global economy to save everything. And you can see the little blip, the COVID blip, and this is looking as bad as that. And I think it is in certain sectors. Look, the Evergrande story, the equity of Evergrande is worthless, right? It is going to zero. The rumor now is that bondholders are going to get 25 cents on the dollar. It's probably what they deserve. And they're going to have to unwind a lot of bad debt, I guess. I mean, it was never good debt to begin with. So to call it bad debt now is kind of funny, right? It was never a good idea. It was always basically handouts to the super rich part of the Politburo, the senators. And now, and this cycle happens, right? In 2005, this happened. They had to bail out the banks, just like we bailed our banks out in 2009. And I'm not sure it'll go that far this time. It might. It might. But look, China has plenty of reserves. They have plenty of foreign currency reserves. They have plenty of weapons. And most of all, they just have plenty of assets. So everybody talks about debt in the absence of assets. It's like talking about money with the absence of the conversation of debt. And we talked about this up in New York. There is only one money in the world, gold, right? Because money is something that exists in the absence of a liability. Everything else are just debt certificates. They are basically currencies, paper currencies that are the other side of government debt. And that doesn't make them bad or evil, but they're not true money. Money has to have no associated liability. And so everybody talks about China in the absence of assets. They're like, oh, they have so much debt. Well, they have lots of assets. Remember, because of the way the command and control economy works, about 40% of the debt is covered by assets because the state owns the banks and it owns the SOEs. So literally they can cancel about 40% of these bad debts. So it's not as dire as it seems, but it's certainly something that could.
Both Ray Dalio and Mark Yusko definitely share that it's not as dire as most people think the situation is. In fact, according to CoinShares' report, looking at all digital assets, this improved sentiment could be a seasonal phenomenon, but we are not seeing a commensurate rise in volumes in investment products. This suggests that some investors are taking advantage of recent price weakness and the continued rise in altcoin popularity. Willie Wu chimes in and pointed out that speculators are selling down while on-chain investors have been in strong accumulation mode. He tweeted, SPX teetering, threatening a large sell-off. Bitcoin carving out a Wyckofian distribution pattern. speculators selling down in risk-off mode. Meanwhile, investors on-chain have been in strong accumulation. It's going to be an interesting opening to this morning's equities market. With most traders anxious to see Bitcoin and other cryptocurrencies' trajectory in the midst of China's Evergrande situation, what do you think about what these featured experts had to say? Do you believe China can easily get over this hump and global economies and cryptocurrencies will not be affected in the long run? Let us know in the comments below. We'd love to hear from you. If you enjoyed watching this video, do give it a like and do subscribe to the channel so we can always keep you updated on cryptocurrencies. Till the next video, this is Crypto Revolution.